Today, we will talk about what a debit note is and how it works. A debit note is a document used to inform. A debit note is a document used by a vendor to inform the buyer of current debt obligations. It can include information about an upcoming invoice or serve as a reminder for funds currently due. Buyers can also create debit notes when returning goods received on credit, including the total anticipated credit, an inventory of the returned items, and the reason for their return. Debit notes are commonly used in business-to-business transactions involving an extension of credit. They inform the buyer of the seller debiting their account, but no actual money transfer happens until an official invoice is issued. Debits and credits are tracked in an accounting system to monitor shipped inventories and payments owed. Some companies use debit notes to bill for items that are not their primary business or to correct mistakes in invoices. Debit notes can also be provided as shipping receipts with received goods, or as informational postcards serving as reminders of the debt accrued by the buyer. Debit notes may have various formats based on the issuer, but they commonly include components such as the name and address of the buyer and seller, date, and details of the goods and services in question. Here are 4 key takeaways. 1. A debit note is separate from an invoice and informs a buyer of current debt obligations. 2. A debit note is also a document created by a buyer when returning goods received on credit. 3. In the case of returned items, the note will show the credit amount, the inventory of the returned items, and the reason for the return. 4. Debit notes usually include the name and address of the buyer and seller, date, and details of the goods and services in question. Hope this would help. Thanks for watching.